Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, March 24th, 2020. We'll keep this one for subscribers only. We're going to talk a little bit about the XLF trade, still an active trade. We did hit the first target today, but we're going to keep it on there and see if we can squeeze a little bit more out of that puppy tomorrow or later this week. I think if we hit it, if we're going to hit that second target, it probably shouldn't be too long. So if not tomorrow, by the end of the week, I think. Or doesn't pan out, and that's what I'm going to talk about in here, and that's why I do these videos. All right, so let's start out. I did, as per some of the subscribers, gold and silver members had asked, and over recent weeks with all this volatility, hey, if you can just get a, post out with some charts and your thoughts before the market closes, that'd be great, especially on days like today. Now, I don't always have much of a strong convictions on what's going to happen at the end of the day or where we're going to go from there, but when I do, I'll share my thoughts. I think you guys know that by now. I really try to do my best not to force opinions on the market. It doesn't do anybody any good if I'm always picking a side, bullish or bearish. So there are times that I have no clue where a stock or security is going to go. And like I said, you asked for chart requests, I'd be doing you a disservice if I said, oh yeah, this one looks like it's going here. So I have varying degrees of conviction on trades and securities at times based on what I see in the charts or for whatever other reasons. So this one I did state, in summary down on the bottom, that figured it would probably more likely to get a late session ramp into the close as more shorts are squeezed out of their position, many with forced margin call selling. It only stands to reason. I can look at the put call ratio. I can listen to people that I know personally, things here on the site, that everyone's scared. A lot of people are probably shorting, buying, in the last week or so, thinking the market was going to crater. And look, the fundamentals haven't gotten any better, but what happens in the stock market, supply and demand, and then other forces underneath. When everybody's short, not literally speaking, but metaphorically, you got a lot of short interest. Still, the VIX, has been very high even recently. Had a little abatement pullback since the last week, but not much. It's still at elevated levels. So the put call ratio is high and all that stuff, and that's what puts those temporary floors in the market, even if it's going to go lower over time. So let's look at what happened. Again, it's not easy when the S&P 500 is up 8%. That's about as big as a daily gain ever gets for the most part in the stock market. Going back for many years, decades, to call for more upside. But again, for the factors I mentioned, that's what happened there. We got, I think a lot of shorts were, underestimated just how far this bounce could go and probably tried to short into it just because we're up that much. And so another takeaway, besides the fact, over the last week or so, I've said, be careful the risk reward for staying short. It's just not attractive or for new shorts. And the other takeaway is don't ever underestimate how much a stock or the market can go up or down, especially during a bear market. Bear market rallies, just like the drops are, awe-inspiring, and hopefully you're on the right side of them. The rallies can be just as impressive and sometimes even more explosive. That tends to be the way it works. So, all right, let's talk about where we were and where we might be going. And I'm going to start with the XLF trade. That's where we were, heading into the final hour. So trading today. Earlier, I had revised the first target. I had that earlier at 1984, and then I revised it down to 1968 earlier in the day because I suspected a pullback. We had come close, very close, but not all the way up to that first target yet. And more so, just remember, when you have this is an official trade. SPY, QQQ, although obviously I'm was also bullish on those today. I wouldn't have been trading XLF if I didn't think the market was going to go up. But I made it clear in yesterday's video that if and when the market rallies, that the financials were poised to outperform. And so that's what happened today. We were up 12.4% on XLF versus the broad market, SPY 8.54. And I also said earlier today in the notes that I expected, which is unusual, that I expected SPY to outperform even the tech-heavy QQQ. And so we had an 8.54% lift in SPY, and then QQQ lifted 7.74. Played a little game of catch-up towards the end. I noticed that, but it was actually the outperformance was even bigger mostly throughout the day. And again, why? Well, that's because if there's any if the stock market rallies, it's because collectively there's less worry about the economy, a little more optimism, maybe the worst is over, that kind of thing. And again, it could be a one-day wonder. Don't worry about, I'm not speaking long term here, I'm just talking when you get a big rally. So what's going to rally the most? Well, remember, Amazon didn't fall nearly as hard as Travelocity or Carnival Cruise Lines or Bank America for that matter. So the stuff that is most heavily shorted and most extreme oversold and has a most upside would be those sectors such as XLF, which I said in yesterday's video. I mean, the charts look like death. That financials had to bounce soon. If they keep going down, or maybe they still continue, something's going to break. So, this was just a bear market rally. Probably I think it has more to come. We'll see. Like I said, I'm gonna go over the charts right now. Let's start with that. Let's talk about XLF. Walk through that trade, and then I'll hit on QQQ, SPY, NQ, and ES, and maybe the small caps too if there's time. All right. So this was earlier today. I took that screenshot. It was right here, revising the targets on XLF. And then, like I said, we're right there, about 1968. And took that down from where we were before. We were at 1984. Now let's talk about why and where that level was. So the actual resistance level, this is the big level right here. See all these peaks and these candles? A lot of reactions, a lot of reactions. That line is at 1988. So I originally, as I always do on the official targets, or almost always, I did an adjustment. I take a step down, realizing that. And I've done this long enough to know that if a level's very obvious, you get a 10% lift in the, plus lift in a sector like this, you're going to see people taking profits. Those that got in early, or at any point in this stage, saying, "Look, we're up 10%, we're at resistance, so I'm going to take profit." And if everybody's looking at that line, well, some people are going to say, "I don't want to miss, reversing, so I'm going to sell a little bit early." That is the right thing to do. And so then you have to realize, okay, how early are they going to step in? So I adjust it down. And like I said, when we got there, I realized I may have been, getting a little too close, with that original target at 1984, with the resistance level at 1988. So then I like I said, pulled it, closed it, sitting on the site on the FAQ or the comment section. I said personally I reversed it to a short, reversed my ES. I was also trading ES. I wish there was a futures contract for the financial sector. There's not, so I'll use FAS and FAZ to trade these, the ETFs. You just juice up the leverage a little bit more in those FAS and FAZ. All right, so then I followed up afterwards. The next post there was revising current targets. I gave you some pullback support targets. These are just the earlier charts. So this is the one right here, and that was a nice a couple levels. And you can see when you look at the lines, if I shade, I've started to do this recently. Instead of giving you like, okay, we can do this or this, I don't think that's annoying. It's just saying, look, we can bounce there. I will start to, I'll sometimes shade these with the brighter arrows up here being the preferred scenario, and this being the alternative scenario. It's a little, opacity is turned down a little bit on those arrows. And so that 1917, you can see, was a really nice support level. And my thought process was, look, there was a short squeeze going on in the financials. Shorts are getting squeezed out. Dip buyers who've been looking to buy and saying, my God, I can buy JP Morgan prices I haven't been able to get it at in years, and Citibank and all that. So in a day like this, the buyers are likely to step in early at the first pullback, first support level, even if it's a relatively minor level. We could have certainly went down there. I mean, anything could have happened. That would have been a very objective buy if we got down there, but we didn't. And so that was... so 1920-ish level. The line was at 1917. That was a great place, and at least one person on the site said they recycled back in there. And there it is. You can see we pulled back to that level. Boom, hit it. Closed, never closed above it or below it on this 30-minute chart. And from there, that was an opportunity to recycle back in if you booked profits earlier, or just maybe add to a position if you only took a starter position, or even initiate a position. There was still from there a 3.5+% lift into the close. Actually, more than that, 4%. We bounced over 4% from that 1919 level into the close in the final final hour or so of trading there. So now Okay, where do we go from here? Well, we hit that target. Remember that line, not the adjusted target, the actual resistance level I have, it was at 1988. We closed the day at, we're trading right now, this is showing, I think it's showing pre-market. You can see here a price of 1990. Let me see, and I think we closed, yeah, if I do this, we closed at 1985. So there's where we closed, 1985 versus my resistance line at 1988. And if I put on the after hours trade, we're at 1990. And it's close enough for government work. 2 pennies on a a 19, almost $20 share price. So the story is a 12.4% gain up to resistance. It could be the end of the run, very well maybe. So it's not a bad idea to, again, either take partial profits. Tough part, if we had XLF futures that would trade around the clock, great, because we could then manage a trade if all of a sudden these things start tanking in the overnight session. But in trading, swing trading with stocks and ETFs, you have to take a calculated risk and decide as a swing trader to go home long or flat or short. And in this case, I'm leaving the trade on because I do think there's a decent chance, whether it's tomorrow or probably, if not tomorrow, sometime most likely by the end of the week, get up there and hit that next target there at 2106. That would be another almost 7% gain from where we closed today. And that line, just so you know, is at 2122. So you can see I already had a pretty hefty downward adjustment. I'm not going to try to squeeze out the last few pennies if we get there. So that's it. Let's look at the stock market and see what it did, because again, this trade is completely contingent on the stock market. We're not going to see XLF go up and hit that second target if the SPY and QQQ drop 5% plus tomorrow. It's just not going to happen. Financials are a key sector within the S&P 500, and if the stock market tanks for whatever reason tomorrow, then that's not going to be a good sign for the banks. I don't think that's going to happen, but let's take a look at the S&P 500. All right, so earlier today, SPY broke out, and I did post that earlier that we had a breakout right there and a back test. So talk about objective entries. If you missed the gap up, if you didn't want to chase, and you wanted to go long SPY or ES, you had a second opportunity. We had a breakout there that helped to confirm, today was bullish once we broke the trend line, and then we made a perfect back test. And again, I pointed out at the time, a successful back test of the trend line. That's TA 101. When you're trading, you can take a breakout of a resistance level of a trend line and or wait. You don't always get a back test, but when you do, it's certainly objective to add, because you can quantify your risk, your loss, by putting a stop somewhat below. The problem is sometimes trend lines, you continue to back test for a while and go up, or sometimes you back test and finally fall through. So anything can happen. That's why you have a stop somewhat below in case you continue to back test. But that's it. Now, where we closed is interesting, because I just reversed my future. This is all active trading stuff. Don't try to follow this day in, minute out stuff. I was had longs, and then shorted that pullback, ES and XLF, and then went long again on the reversal. But we're at resistance here. Okay, sorry, I had to pause the video. I just had to make sure everything filled. I'll show you where I had orders to reverse. So probably just active trading stuff. Remember this level here? I showed it earlier. They had a line. I have it dimmed out because it's more of a minor resistance level on SPY, but it's worth mentioning. It's at 244.93. In fact, I'm gonna brighten it up a little bit here because it's worth noting. And remember, we're showing this little white shaded level here. This is the after hours trading session. So this is candle number 1 after the 4 p.m. close. Candle number 2 we're working on now. So we're right effectively there, and I'll show you in a second ES and NQ also at resistance. So this is a breakout and a back test, and by all accounts it looks like, based on what I'm seeing on the charts, price action today was bullish, and I would think there would be more upside to come. Again, we already hit this T1 back here in pre-market on the 20th, but I think there's a good chance we'll hit that again, and maybe this T2. Right now, let's just say this is my preferred swing target. I'm not so sure about T3 getting hit on this rally, if there is more upside this week. So let's just say that's my preferred target. But so far, like I said, looks good. QQQ, Similar story here. T1 was already hit back here. We had this trend line. I said back then there was notes on there, first of the trend line to be hit, and that was off this divergent low. First of the trend line or whatever level I had here, I think 185.46. So with QQQ, remember all last week I was focused on this R1S1 level. I called it resistance 1 because when you're below it it's resistance, and when you're above it it's support. And that's what we gapped up above today. And then as I posted an update, we made a nice test to the top of the gap. That's logical support. That coincided. This is why I tell you to watch all these charts, even if you're only trading XLF. Watch the broad markets because the financials are going to go wherever the indexes go because they're a component. When the machines kick on, I'm talking about the algos, high frequency trading, buy programs. When they kick on and they start buying, SPY futures and SPY or S&P 500 futures or the SPY or QQQ, they're buying everything within there. So the sectors will ebb and flow with the indexes. And so you had, in that case, you had QQQ pulling back to a very nice support, the top of the gap, and that 179.13 level at the same time that XLF pulled back to the comparable support level I gave you earlier. And then from there you bounced, and even if you look at the undercut, the actual gap was a little bit below there. I've had that line there at 179.13, but you could put a support line there. Today's lows right after the open. And from there we bounced, how much did we bounce? About into the close, about another 3% or so in QQQ. So I still favor a move up here to this T2, but I think we could get, it's possible to get a little profit taken the overnight session tonight. Could go the other way too, like I do. I point out levels at resistance, like I did on gold and silver yesterday. They didn't pull back; they went through there. Sometimes you go through resistance, and that's why if you're going to short, you put a stop below. And if you're long and you're not an active trader, well, also have a stop. At this point, I think it's logical to have a stop on QQQ if that's what you're trading. Just below these lows because there's a big old gap right there. If you enter the gap, QQQ may want to make a full backfill of the gap. It may want to run down and backtest the trend line, and you're probably not going to want to ride out a backtest of the trend line because there's no guarantee that it'll even hold if it does. But if it did, you'd be watching, a give back of profits, to the tune of about 7% or so if it got there tomorrow. And the longer it takes to get there on a backtest, the lower we go. That because the trend line is downward sloping. All right, so there's QQQ. Like I said, near term I do favor more upside, and right now that would be the max bounce target T3. By the way, look at these targets. If we enter it, we have these big gaps back here. These are very technically significant gaps, and there's also a lot of resistance right here. So if we pop that, we're probably going to fill the gap, and that would be a pretty big move. And I want to say that would also has the potential to bring XLF up to that comparable gap. Let's see, XLF, is that the same gap? Let me see here. QQQ, go back to that. QQQ, that gap was from March 12th. Let's see if XLF would get up there. XLF, March 12th, there's a gap right there. That would be a backfill. If XLF does it, it would take us up to 2250. That's that resistance there. However, I think what would happen is QQQ could backfill that gap, and XLF might only make it to the bottom of the gap right there at about, that's where that second target is set, because it fell so much more and it has so much more to catch up. Remember, the financials are still in bad shape here. We've had coronavirus could disappear tomorrow, and the financials still have some issues right now. There's been a lot of damage done to this economy fundamentally. There's been a lot of damage technically done to the charts. So, again, the best case scenario, I'm looking for a bear market rally. Hey, bear market rallies are explosive, powerful. I love to trade them. But right now, at this point in time, I'm not seeing new highs in the stock market anytime soon. If that changes, I'll let you know. Anything's possible. That's one thing I've learned over the years. Anything is possible. So I'll try to be open to it if it looks like it's going to happen. All right, let's get to the futures. I already gave you levels on SPY at resistance. Let's talk about the futures and we'll wrap it up. Okay, S&P 500 futures, we're looking at a 60-minute chart. Earlier we were on the 30-minute charts of QQQ, SPY, and XLF. 60-minute charts, they're very similar, obviously, just the candles here are 60-minute candles, since I like to swing trade on the futures here. All right, downtrend line number one. This was one I've had for weeks here. That was taken out. We had a little false breakdown whipsaw. I already covered this in today's earlier video. Breakout, pretty impulsive, solid back test. Here's that little other uptrend line we've been looking at. So, the pullback, that trend line held, and we thrust it up. We're coming up on pretty good support, or pretty good resistance, I should say, at about 2460 right there. I'm looking at all these reactions here. We might have had a trading halt in there somewhere, but it's decent resistance. And then there's also, we popped up here at about 2500, so you can also call it a resistance zone because it's close together. When I have two support levels or resistance levels in close proximity, I'll call it a resistance zone. So that's what ES has to contend with. And then you can see the next level up here. And then if we really get some traction going on a bear market rally, then 2696 would be the my maximum upside target, where I might be very interested in putting back on some swing shorts, official swing shorts on the site, closing out any longs that I might have at that point if we get there. But there's some work to be done to get up there, but it is certainly a possibility. And let me do one thing real quick. Okay, I wanted to throw up some Fibonacci retracements, which I did here. It never fails to amaze me how often these Fibonacci levels, what I did, just so you know, I probably should have left the video running while I did it. I measured from the lows right here to these highs back here. I must have hit that high close enough. There's another previous reaction high right there. And you can see these are the key Fibonacci levels. 38.2 is at 2395. Remember I had that 2386 level there that was taken out. So we've already retraced 30, from that point. 50% level comes right in. Remember I had that 2460 level. That fib comes in at 2464, close enough. So you can see these Fibonacci levels, not by mere coincidence, line up very well with these the resistance levels that I had on the chart, and I haven't even put the fibs up until now. Those are levels I already had. So again, that would be the 61.8. This is usually a typical retracement on a counter trend rally, runs from about 38.2 to the 61.8. I know you can't see the 61.8; it's buried. They centered these in the middle of the screen. I'd have to change the settings, but so that's it. And to come. Why are we at 100% here? That makes no sense. What did I do here? Let me fix that. Wow, much better. Okay, I was starting to say, wow, would we already be at that 61.8% retracement? Okay, I redid the fibs, and again, I measured from this recent low here the other day to those highs. That was that early March right there. Yeah, March 3rd and March 4th. Remember, that's where the trend line that I'm using starts from. That wasn't the highs in the market, but it was a major significant reaction high. That was the first bear market rally that we had, the first tradable one, where we went long QQQ, and then we reversed it and went back short after the bounce and caught most of that move down. All right, so and you can see we still line up, though obviously there are different levels, but here it is. So the 23.6% fib comes in at about 2398, and I have 2386. That was a pretty big level there. We have the 38.2 fib. It looks like 2537, very close to that 2549 resistance level there, and that's a big one right there. The 50% fib, I didn't have a line on there. The next level I had up here was 2696. So again, this is right now, let's just say, my uppermost bounce target, what I think we might see this week if there's more upside in the market. It comes in with a 38 fib, and the top of that, a lot of resistance there around that 2549 level. How much more would it be from where we are right now? A little bit. I might have undershot that a little because the futures went up a little in after hours. 4.5%. That looks like what I think to be the maximum upside this week. And again, don't let your guard down. Never trust a bear market rally as far as you can throw it, because just when it starts to look good, that's when they can pull the rug out from under you. So you got to trade it accordingly. They're great to be in as long as they're going, but you don't want to be left holding the bag. In other words, you don't want to hold on too long once it's over. And let's look at the NQ. Before I leave here on NQ, I want to mention that this is 2460 That's where I think we're going to pull back tonight. If we hit it, I think we get a tradable pullback, and I'd rather sell a little early, step in early. I think that's where the sellers might step in early. Where to? Well, at least this trend line here, maybe that 2386 level. That's actually a little bit better. I think that's a likely target, and I know on YouTube you might have a hard time seeing this chart, so I'm zooming real tight there for you. And that would be it. So we're close. We've hit a high of about 24.45. That's at 24.60, and I'm going to show you NQ in a second. If we pull back to that 23.86 level, that'd be about a 2.4% pullback tonight. Maybe good for a quick trade. Again, there could be a little more upside because we're not there yet. Let's look at NQ. Now the thing is, NQ, the Nasdaq 100 futures, they're at a pretty decent resistance zone. We're going to zoom in a little tighter here and take a look at that for you. All right, so there it is. I have that resistance zone from 75.40, almost 75.41 up to about 76.20, and that's it. We're there now. We hit it once today, pulled back, tested the same trend line I showed you earlier, had another that late session short covering rally I talked about, and we're there now. So that's where I think we reverse most likely from here, from where we're at now, about that 75.40 level, up to the top of the zone. That would coincide with maybe a little more upside for ES hitting that target right there. So maybe a little more upside, and then you have a pretty important reaction high. I think the odds are good for a pullback. Might be worth a shot, if you want to take a shot at a short trade. And then pullback targets, well, I would watch ES for that target I just showed you. And so far NQ has been walking up this trend line here, and it may want to come in and back test this trend line as well. And I think any pullback here to that 72, that would be probably my max target. It could certainly go lower, but you have the uptrend line right here that I showed you yesterday, I believe, and 72.72 right there. So that would be, let's just say, an optimal pullback target zone right here, something like this. If I can get an arrow tool, boom, pull back overnight and thrust up. Whether we have a little more upside before we do it or not, that's what I favor. If they just keep pressing this, or we get some headlines tonight, something on the stimulus package or something big, if that didn't already come out. I didn't even look at the news today, to be honest with you, whether this had anything to do with the stimulus package or not. Last I checked, it hadn't yet passed. But that could drive us up. But this is what I'm leaning towards right now. And let me just say this too. We had a heck of a rally today. It's a bear market rally as of now. That's all we can say it is. So, if you short here or here, anywhere in here, instead of covering here, you can allow for a potential runner trade. Maybe that's it. Maybe that's all we get for now, and the market does this. And so a runner trade, you just, as it starts to become profitable, start with a stop up here somewhere. And, if it starts to go, if you think there's more downside, or you just want to be open to the potential there is, when you get here, move your stop down here. When you get down here, take out that level, move it down here, and so forth and so on. And leave that open to become a much larger, trade than just the that pullback that I'm looking for down there. Okay, so to wrap it up in a nutshell, I'm leaning towards, but not sold, on a pullback sometime between tonight, maybe tomorrow morning, followed by more upside. So again, for a swing trader that with ETFs, things like that went home, I think there's a decent shot we build on today's gains, if not tomorrow, which I favor, maybe some point this week, before the week is over. And I also updated this earlier. I told you guys that FAS is not tracking well due to the decay, so I just want to point that out, that we had that perfect, as I showed you earlier in the video, XLF closing within pennies, a couple cents of that actual resistance level from right here. That's the same resistance level. I matched these lines up, and I had a couple questions on FAS. I mentioned there's a lot of ways to trade the financials. You can go long or short XLF. You can buy SKF, I think it is. Yeah, that's 2 times short. You can buy FAZ to short, that's 3 times. You can buy FAS to go long, etc., etc., etc. I can't possibly list levels and targets for each of these, but the way you can replicate these charts, if you see, a chart of XLF, and you always want to use the 1 time. Again, the reason is the decay in the 3-time leverage ETFs. This is the actual sector. It's pure. There's no leverage distorting it or anything like that. It's tracking the sector. So you want to use this chart for your entries and exits, even if you're trading FAS. So that's why I made a point to post that earlier today, that, hey, look, we were within 1% of the first target or the resistance level in XLF, yet FAS was 10.5% away, whereas it should have only been 3% below. So that told me at that point, guess what? When we hit this first target on XLF, which we since did, FAS was going to fall shy of the comparable level again when I had that trend line set right there. But there was either decay, it was possible. These ETFs also pay dividends and things like that. Just they have distributions that they make, and that can knock the share price down a little bit. So that's just a kind of a takeaway if you're trading this thing for the juice. It was up 30, almost still up 34% today. But it cuts both ways. I can sit here. I could have added this as official trade idea and say, oh, we made 34%, or even if we didn't come into the day long. But that's not the case, because to be proper risk management, money management, if you take FAS, you should take 1/3 of a position size than you would normally take in XLF, because you're exposed to 3 times the risk if it goes down. And so it all washes out. You take this number divided by 3, and that's your what I call beta adjusted return. So I just share this because I know people like to trade these things, and and if we do short, then sometimes I'll use maybe FAZ or SKF, because you can't short XLF in an IRA. They don't allow that. You have to buy an ultra short ETF if you're trading, or in a non-margin account. We call it cash account, cash brokerage account. So you can buy these guys and then profit from a drop. And of course, this one went the other way because it's a short ETF. Okay, I'm going to wrap it up here. You have the levels to watch overnight. You have what I think is going to happen in the next couple days. Maybe more upside here in this market. Might get some legs. And if it looks like we're going to get more than those next targets, or even the targets after that I showed you, as long as this market continues to rise, I will do my best to update that, and maybe even extend that target on XLF, the official target. I gave you these unofficial targets earlier on that board earlier this morning, but that would be, again, if we're going to come up, if it looks like we're going to open up near T2 tomorrow, and I see a reason for it, I would extend. But I think if we gap up to T2, if you're in this trade and we hit T2 tomorrow, you're looking at a gain of better than 11% in less than 24 hours or so. You take it, you take the profits and run. That's what I think you do. All right, guys, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.